Okay, let's look at the stock market charts. We're looking for trade ideas based on what the charts tell us. Please drop me a thumbs up if you guys get value. Follow along, subscribe if you haven't done so. And then again, if you're interested in additional trade ideas, additional market insights, additional charts, I'm submitting those in the private member group. Check it out. Link in the description below. It's like $5 a month, cancel anytime. So check it out if you're interested. We had a big winner this morning, so I'll go through that. All right, so triple Qs. This is our tech sector. We have, we had this bearish rising wedge here. It looks like this, and we've rallied. We've kind of broken out to the upside. I think it's going to be a false breakout, kind of a bull trap, based on just what the charts are telling me. But it doesn't have to be. But here's the biggest thing: we can kind of do two things here. One, we could kind of expand the wedge like that. But see, if I do that, I only have 2 data points. 1, 2, and it's just not a very valid wedge. This is much better. All right, we have 1, 2, 3 reactions. Got a 4th right there, and it gapped up. So that's the wedge. We're on the upside of the wedge. To me, it looks like when I see this price action on a bearish rising wedge, and we popped up here on the election momentum, to me, it looks like stop rate price action. So I'm watching for some sort of rejection. It's definitely not a long or a breakout that I want to take. And here's why, the main reason why. We made a new high recently right here above the former high right there, going back all the way on July 2024. Made a new high. But look at the momentum. We have not made a new high in momentum. We are extending the negative divergence. All right, you see it right there? If I zoom in on the RSI, you can see the RSI starting to turn down. So there you go. It's just an extension from, as of right now, of the divergence, which tells me that this new high that we made is very likely going to get sold into. So that's kind of the status quo on the market. What we've seen is it runs up, makes a high, then it'll pop up and make a new divergent high and then roll over. And it keeps doing that kind of in this grind higher. It just pops up, divergent high, sold into, pops up, divergent high, sold into. So I think that's very likely. The next sell signal is likely going to come soon. I actually have just a little bit of short that I've kept, and I'm looking for some sort of rejection candle, outside day, failure back within this wedge. I think we're going to get it soon, but maybe we don't. So I don't want to be too heavy on it. And obviously, we keep going up. We want to stop out of shorts in the triple Qs especially. One thing I do want to point out, let's look at the futures, this Nasdaq futures. If you see here, again, same kind of look, bearish rising wedge there. And then we broke down pre-election and then broke to the upside post-election. A lot of whipsaws basically. But in general, it's still pretty choppy, volatile action. So down, up. Where's the real direction? There's really no clue quite yet whether the breakdown was the real deal and this is just a false kind of rip up on the election, or if the breakdown was a false breakdown and we rallied up. So we need to kind of see. As of right now, obviously we're on the upside. The breakdown so far is, I would lean towards a false breakdown because we've obviously rallied up. Do we hold up here and just build on these gains? That's the question. The one thing though to point out is you'll see here on the futures, very clear, made a new high right there just above that former high, but look at the momentum, clearly still a negative divergence. It's not, the price moves up and makes a new high, but it's not able to match the momentum, which tells me that this is a divergent high that has a very high probability of getting sold into. Okay, so I think that's what the market wanted to do, is break down, ramp up, put in a new divergence, and then the real selling will show up. Okay, this selling that we saw, the breakdown, did occur right ahead of the election. So obviously when you see moves that occur right ahead of large events like FOMC meetings, earnings reports, presidential elections, usually you want to take those with a grain of salt because they often can prove to be kind of false moves. So now the market's free to do the real move. What it wants to do is, is it going to sell off or does it hold the gains that it had last week? Yet to be decided. When you look at the SPY has a little bit of a different look because the SPY, you've got this bearish rising wedge, very clean wedge. We had the breakdown again, leading up into the election. But the post-election rally, the big gap up, all it did was backtest. We've just been backtesting. So What I'm waiting for is a rejection candle to help confirm that this backtest is in fact resistance, and we're going to reject and actually roll over. You see the momentum, clearly negative divergence, negative momentum. So to me, it's actually pretty objective to short the SPY right here. Although we don't have that rejection candle, we can continue to backtest for a while, maybe grind higher. So I'm kind of waiting for some sort of a rejection candle, bearish engulfing, doji, something that tells me the sellers are starting to show up. We just don't have that quite yet, although we do have the momentum is a divergent high. So I'm anticipating that selling to show up soon. Just need to see it. And then if I look at the futures, the ES, same kind of look. You can see we broke down pre-election, rallied it up right into resistance. All right, there it is, and still divergent high. Okay, we still have negative divergence there on the momentum indicator. So, I mean, to me, if you're just a technical trader, this is a bearish pattern. The widest part of the wedge, all right, would be your measured target, which is about there. You take that at the point of the breakdown, which really happened here, and that sends the ES, the SPY futures, down all the way down to about 53.81. And all we have is a breakdown and a back test. All right, so this should roll over or continue to roll over. But yeah, that's really what we got. Okay, Mag 7 stocks. NVIDIA kind of breaking down, but nothing's technically wrong today. We're selling down a little bit, but the former high, this is the former resistance. It's support now, and you're seeing the buyers kind of hold that. So there's really nothing broken with the price action. However, the momentum tells me that we're likely going to break down soon because we're made a slightly new higher high above the former high. And the momentum is still just diverging. It's just momentum keeps dropping off. Each new high we're making in price is a lower high in momentum. So this rally is very likely coming to an end. And it's very one-sided. So when that rally ends, it's likely going to be a pretty big move to the downside, trapping kind of these late to the party longs, and probably with a big gap down. So something to keep in mind. We also probably on earnings, I guess. Earnings are coming up here on the 20th, so next week, and I guess that the chart tells me because the momentum's dropping, it's going to have a negative reaction on earnings. Tesla broke out last week from the downtrend line on the just the election stuff. I mean, everybody kind of knows what this is all about. But in general, you have a downtrend line there on the daily, gap up on the election, and that's a breakout. It's impulsive. So, if you were shorting Tesla at resistance, you really wanted to get out of that short on that gap up, especially when you saw it close up there. It's a breakout. So, and you could have gone long, and it's, kind of selling off a little today. But in general, I just don't see any real resistance overhead. And the momentum's strong, so definitely not. I just don't want to short it here. There's just no indication that this rally is finished, so that's what I got on that one. Google, nothing really going on. It's not the cleanest chart, so I just haven't really been paying too much attention. Resistance right now is about 180, 164, and it's holding that resistance. There it is. So that's it. Just resistance. You break out above that, you're probably going to go make a new all-time high. Otherwise, this will hold and, should sell down. So not a whole lot there. Apple's selling off today, coming down to support. Support's about 221-ish right in here. So that's it. You've got support. You break that, this will start to put some pressure on the market. Apple's a big player, regardless of what Tesla's doing. Tesla doesn't have the weighting like Apple does. So, but yeah, coming into support. So nothing really broken, but it does, you do have this negative divergence. We're just coming off a divergent high. So, and a sell signal. So the bigger picture, this right here was a divergent high. There's an uptrend. I've got it all marked out. You had a sell signal, rally into resistance, selling. All right. So the trend should be lower. All right. I really see Apple coming down to the 200-day moving average for the move, before the buyers try to hold that. Microsoft kind of wedging within this triangle here. I could adjust this upper line. The bigger picture is the blue line, which is your support. All right, I've got that marked out as support, and I probably even can drag it up from the lows here, maybe something like that. And you could say that we've broken support, but in general, I think it's close enough where I can't call it, and it's sitting right there on that trend line. So there's very likely a move coming in this one. We'll just watch. Gap up would be bullish, gap down would be bearish. And the momentum doesn't really tell me much on this one either. You've got kind of dropping momentum, but you also have dropping price. So there's not really divergence. It's just compressing. So that one doesn't tell me a whole lot. Meta is looking ripe for a breakdown, but it hasn't triggered yet. So on this one, you've got a nice clean uptrend coming off the November 2022 lows. You've got a bearish rising wedge here. You've got negative divergence, and they're just holding the wedge. Still holding it. You can see today they dipped it below, but again, buyers are there, and they're just holding that wedge. So until we get that breakdown, there's just no sell signal. They could ramp it back to the top of the wedge. They could run it up, do kind of a stop raid. We just don't have any sell signals yet, but they should come soon, and I suspect it's probably going to gap down to this support zone. If we get a sell signal, I suspect it's going to gap down to about 538, and then there will be buyers there. They'll rally it up a little bit, and then it will be a sell signal. So that's kind of what I'm thinking is going to happen, and then it'll continue to roll over. Amazon, bigger picture on Amazon. You've got this uptrend line to watch, and started to break through it, but in general, still held it. Could probably just adjust it down, and yeah, we're still above there. So we are holding that trend line. Yeah, Amazon's not the cleanest chart either. It does kind of have negative divergence that's been building, but there's no real sell signals in the middle of the range here, or it's kind of no man's land. So moving on from that. Okay, gold stocks. GDX looks like it's hitting some support. All right, you've got support down here about 36.21, and we're really close to that. So you should get a bounce here. One of the charts I put out today in the private member group early this morning was this KGC. This one, very clean. It just broke down, but you've got a bearish rising wedge, negative divergence. It had a little false breakdown right here last week. You can see it broke down. It opened up down here, and the buyer stepped in and closed it there. And the next day, they ramped it all the way back up. So that was a big kind of short squeeze, but that's the most they can do. And then this morning, pre-market, it was gapping down back below the wedge. So that was the signal. Last week was a little fake out move, run some shorts out of the move. This week, with gapping down pre-market, told me, okay, this is the real deal. Gap down and nothing but selling. So this should hold. I think this is going lower. Widest part of the wedge would be our measured target at the point of the breakdown, which really was there. And so it sets us up for a push down to the 200-day moving average. That's kind of what I've got. It's about, and then you look for horizontal support as well. If I can grab a line tool once in my life, and it's right about there, which is roughly 780, we'll call it. So that's the measured target, and that's where I think this thing's headed. It is with another, 17% downside on that one. Another one that worked out for us, MPWR. This is a semiconductor. Again, I was talking about this one for a while as a really clean setup. You had a bearish rising wedge, negative divergence, and I did jump in early on this one short, and I talked about that. You go back and look at October 29th, October 30th. Look at my videos. I talked to you guys about how I'm jumping in early short on that one, anticipating the breakdown. Earnings came out. It did break down. Bear flagged. All right, there's a bear flag, and the measured target for this big move is the widest part of the wedge here. Take it at the point of the breakdown, which is really about there, and it sets us up for a push down to about 615.80, and you can see it's basically hit that measured target. So I think that it is, the downside's finished. There's really no short here anymore with the big gap down 20% today. And if anything, it really looks better like a long, because again, you do have support right here. See the former reaction low, there's a former reaction high there. We're hitting that and bouncing. And then longer term, you've got this uptrend line coming off. I have to go to the weekly to really show you guys, but coming off of, almost the all-time lows. But look, there on the weekly, support, and gapping down pretty much there. So this is a good zone to go long. All right, I think it is if anything, for a bounce. I think you could either fill some of these gaps. It looks like a good long. So I've actually flipped long on this thing for that bounce. I think there's a little more upside here. And back down to the daily targets for any kind of long. I mean, you look at former resistance. There's some resistance right here at 640.50. I see a reaction there, and then obviously the gap fill, or up to about 697. Everybody's eyes will be on that gap fill, so you might not want to wait for that. But still, a bounce off of kind of that support area that I just highlighted. If you look at that, a bounce up near the gap fill, that's a 26% bounce. So we capture a chunk of that, it'll be a good. Interest rates, I'm watching these. They're not doing anything today, so the bond market's I think the bond market actually might be closed. I'll have to double check. But they're not doing anything today, so we likely need to wait till the rest of the week. But the bigger thing that I'm really looking for is on the TNX. This is your long bond interest rate. We have a downtrend line, all right? So until that trend breaks, it's a downtrend in interest rates. If interest rates fall in a nice organized fashion and the market's kind of holding up, that should be bullish for the market. The market will see that and say, hey, let's make another leg higher, okay? If interest rates are falling because the market's crashing or coming down pretty good, that's a flight to safety. So that's not necessarily good for the market. That shows you that money's moving out of the market and into the safe haven of bonds. So that's one thing to look for. And then finally, you have this downtrend line. If interest rates rally and break the trend line to the upside, you should see stocks start to freak out, okay? FITB, this looks like a good short. Today's price action, to me, looks like stop rate price action. You have a very clean and well-defined bearish rising wedge. You have well-defined negative divergence, all right? We had a post-election ramp right into resistance here, and today they're gapping it up, and it's above the wedge. But usually when you see that kind of price action, it's stop rate price action. So we had the little breakdown right ahead of the election, then we ramp up. To me, this looks like stop rate. I'm expecting this to roll over. If you want to wait, I think it makes sense to be conservative and wait for some sort of a sell signal, breakdown here, and ultimately a break of the support here, the wedge. And then the major target does set us up for a push down to somewhere down around here. I like about 32-ish as the price target. So I like it as a short. It's not fully triggered yet. Little false breakdown ahead of the election. So we need to see a break of the wedge for the full-on sell signal. It does look like it's going to do that, but it hasn't done it yet. So obviously, you want to manage risk. This one, MOS, still looks like a good long, but it's not fully triggered yet. On the daily chart, we do have this bullish falling wedge. We've got one reaction, two reactions, and I just captured that reaction from last week. So we have three. So there's a bullish falling wedge, and we haven't broken out yet. So, not fully, not fully along, because obviously earnings are coming out tomorrow, and they could gap that thing down to the bottom of the wedge. Very possible. So there's bullish divergence here, so it's definitely been building that bullish momentum. So could break out on earnings, but until we see that breakout, it could go either way. It could kind of gap down and then they'll run it, or it could just gap up. We don't know how earnings are going to play out. It should go up after earnings, whether it's going up from down here or just gapping up. Okay, not too much more, so I'll go ahead and wrap up. Drop me a thumbs up on your way out, and I will catch you guys on the next one. Take care.